Hi, thanks so much for joining in. You're watching Ask PQ. My name is Alex, and with me is Smriti. We'll take you through the next half an hour of trade. And in fact, this show is specifically so that we can get all of your stock-specific questions answered. You can send them to us on any one of our social media platforms, or indeed on the WhatsApp number that should be flashing on your screen right now. Now, to get our two experts on board, we've got Rohan Mehta, who's the founder and portfolio manager of Turtle Wealth, and we've also got Vaishali Parekh, Vice President, Technical Research at Prabhudas Leela. Thank you so much, Vaishali and Rohan, for taking the time, and pleasure having you on the show. To kick things off, like we normally do, we have a segment that we'd like to call BQ Focus or Ask BQ Focus, and we're trying to look at Bajaj Finance today. Smriti, we've got Bajaj Finance results. There's lots to talk about. What can you do to set the context for this conversation?
Yes, you rightly mentioned we have Bajaj Finance results coming up probably in the next few hours. But I looked at the business update that they came out with, and they've shown pretty strong numbers. So if you look at the AUM, asset under management growth, it's 33% to 2,90,200 crores. New loans grew by 26% to 8.53 million. Deposits grew 39% to 54,800 crore. Now, apart from the business update, Bajaj also recently approved a fundraising plan of about 10,000 crore, out of which 8,800 crore will be raised through QIP and 1,200 crore through a preferential allotment. Now, this will definitely give a boost to the capital structure of the company, and the upcoming festive season may also help increase the penetration, especially in the rural areas, and may sustain growth in the urban areas. Now, Coming to our guests, I'd like to open the question to Rohan first. Rohan, what is your view on the fundamentals of the company, and how do you see it in the next couple of quarters?
Yes, it's a very interesting take. It's a great company, and I think so. It's one of the few who has been a consistent leader into finance, and it's not a very small segment to look forward for. So, acquiring a tech company plus, having better and better, business and, lower and lower NPAs. So I believe that, in every result now, Bajaj Finance has to surprise markets, because if it doesn't surprise markets, the valuation, what it quotes at, book value, it is something which is or rather rich valuation, what we can say. So we would wait for a surprise factor. I think so this quarter numbers will give a surprise, and let us see. So on a short term rather than on a 1 year time zone, we believe that we can see a 10,000 plus or maybe 20% upside on the stock.
All right. Let's take a technical check on this as well. Vaishali, what's your view? What are the charts showing for the next couple of months?
Very good morning to all of you. And first of all, we don't actually play results, but I would say purely on technical terms, Bajaj Finance has been in a very strong uptrend. So I would say now 7,700 should act as a crucial support level, and we have a projected target of 8,700 levels. So keeping that in mind, we have a positive view, and it would be a buy at every decline, keeping in mind 7,700 acts as a crucial support. So for now, we have open targets 8,700, support 77.
Okay. All right. So let's kickstart the questions. Like I said at the start, viewers, you can send your questions live to us on social media. Any stock, not just on Bajaj Finance. You can ask about any stock, and hopefully our experts have coverage. And if they don't, they can probably give you a similar company that you can invest in as an alternative. The first question that I'm taking today is coming from Rajesh Maheshwari. He's writing in on WhatsApp, and he's writing in from Indore. His question is about Deepak Nitrite. He's got 45 shares at an average price of 2,101 rupees. And I'm reading this out to the both of you. Since the stock is hovering around this zone, does it make sense to hold or exit? As the chemical sector is subdued, what other sector can be chosen? Please let me know both the fundamental and technical views on this. The question first to you, Rohan. Some are saying that they're out of the woods, the worst is over for this sector. What is your view on Deepak Nitrite?
Yeah, see, first of all, on the sector, the worst is over, and we may see still 1 or 2 years of a sluggish or a consolidation move. On Deepak Nitrate, the only thing is that the capex are so huge, it is going to pinch, and it has already pinched the company very high. So I would rather, as an investor, would look forward for sectors like automobiles, sector like PSU, power, to look forward for investing rather than putting the off cycle, which is chemicals and specialty chemicals, because that's not the sector which is outperformed, and I would look forward for an automobile where the values are much higher. So would recommend to exit and shift to automobile sector.
Automobile. Do you have a specific recommendation in the auto sector then?
Yeah. So this is what we hold in our portfolio also, and so one is like I think so. The Maruti has been phenomenal on a value. Still, we look forward for Bajaj Auto as a great value. Both are extremely leader in its own category. So this both can be a great value creator in coming time.
Okay, fantastic. Vaishali, coming to you on Deepak Nitrite, what's your view on the charts?
I would say right now there is no technical damage. I mean, it is in fact in the near term also, if you see the recent history, it is in the process of higher bottom formation. So as long as 2000 levels are held on as crucial support, I would say that, well, if this stock crosses 2200, there would be a further conviction of the stock going towards 24 to start with. So then from there on, we can have a relook. But I would say not in a hurry should one exit the stock. If 2000, now that he has held on for so long, he might as well keep in mind 2000 should act as a support and wait for a bounce to decline if he has to. Wait for a bounce back to come, yes, towards 22 and 2400 levels.
All right. Next up, we have a QSR, a question on the QSR space. It's from Netra, and she wants to know which stock would be a good buy at this point of time. Her time horizon is about 1 year. Now, with the tailwinds of the festive season and even the World Cup, Rohan, what are your top picks in the QSR segment?
Sorry, but I don't track QSR. I used to track Jubilant Food, but then after that, I don't track QSR. So no comments from my side.
All right. Jubilant Foodworks, you said you track?
Yeah. I used to track the only thing is that we are not positive on Jubilant, so I would not recommend not to be positive on Jubilant. So that's the reason I don't track any QSR.
All right. Let's take up the next question, and the next one is on DMart. Now, DMart today got an upgrade from Morgan Stanley, and it was a pretty good upgrade. The target price was raised to 4471, and revenue growth was raised. So let's look at DMart. What fundamentals do you think will take the company forward? Rohan, let's take it from you first.
Yeah. So first of all, let us understand it is quoting at more than 100 times of valuation. See, it's a great company. We don't doubt it, but every great comes at a price, right? So I think so. The prices are something which already has been done very well. It's highly valued. Secondly, now the competitions from Reliance, competition from other markets are very, very high, and also from online markets. So on that point, I think so. I have no surprises which has done by Avenue Supermarts from last 2 years. So I will avoid and wait for something to happen that I can quote at this valuation. Either I get it at 60, 70 times, or either there is a surprise on the street. Both is not possible. So it is an avoid from my side.
Okay, fair enough. So I'm actually curious because you said that you don't track the QSR space. Vaishali, I'll come to you in just a bit. Why is that? And why did you stop covering Jubilant?
So what has happened was
No, sorry, Vaishali, just a second. I want to hear from Rohan why he doesn't like the QSR space.
No, it's not my personal choice, but I'll tell you what happened. Because see, Jubilant was great not because of its pizzas. Jubilant was great because of its delivery. What has happened post Zomato's of the world is that the delivery has been outdated, not as a specific from Domino's, and brands like La Pinos and normal other brands have come highly onto the competition. So the mode what Jubilant had, the Domino's had, was fading away, and that's where we sold off Jubilant Food, and that has proved very well for us. And other areas, we feel that it's a business is too competitive. We are not getting any structural great value and great brand out of it. So that's the reason we don't track, nothing other than that.
Do you have coverage on Zomato by any chance?
Yeah, so we of course we have on Zomato. So Zomato, we like it. We feel that Zomato, it's a brand which has taken over, and there are a lot of wallets which are going to add in Zomato from deliveries from like Swiggy has come recently with Swiggy Genie and Zomato with a lot of other stuffs. So Zomato looks forward for a great future coming ahead, and once it goes very positive onto the cash flows, and Pat, then again the things are going to come. It has created a dent with a more than 50% market share positive on Zomato. But I'll tell you, QSR, in comparison of QSR, Zomato will be a more wealth creator because it makes more money with all the restaurants with the lowest capex rather than setting up a QSR restaurant.
Okay, interesting. So I'm glad because my viewers said that she's appreciated your comments on the QSR space as well. I will go to you, Vaishali, on Zomato, and if at all you have a view on the charts for Jubilant as well, since we've discussed the fundamentals.
So I would definitely agree with Rohan because Jubilant, if you go to see and if you compare it with other stocks, well, it has been quite a laggard and there's really nothing happening in this. But well, we were tracking Westlife to start with, and Westlife has given very good returns. I still see that for a long term, the upside potential is still there. But well, if one has to buy, one has to wait for a decline because we've seen a good run up. So coming back to Zomato, yes, technically very well placed, and it is a very gradual, slow-moving stock right now. But well, the buying was good from 40 and 50 levels, and it's seen a good run up. So having said that, I don't say that upside is limited. There is still scope of upside. So, but the buying levels, ideal buying levels would be around 90-100.
All right. Next up, we have a question from Mandar Ambedkar, and they're talking about Ercon International, which has recently, a couple of days ago, it got the status of a Navaratna company, and the stock has been soaring since then. It's about 8% up today and has given about 178% returns in the last 6 months. What are the fundamentals that you're looking at, Rohan?
So I'll tell you, all the PSU, Ercon is one of them. Still, I go to people and talk about PSU, and they are not at all convinced with PSU. And that's the reason the rally is not going to get out dust from the markets. So these all companies have been so cheaply valued in last 10 years. Ercon had been a very recently, a listed company, so would not comment more on that. But look at any PSU. I believe that the things are more coming in next 1, 2 to 3 quarters. We will be extremely surprised what these companies are going to do, and people don't have conviction on it. I started my career in 2006. I used to convince people for private company. In 2023, I need to convince people for PSU companies, and that has been a great value migration which has happened. And I believe all the PSU which are doing great will have great value, including Ercon with a lot of great businesses. Navratna company is just a status, but numbers are going to be more surprising than what we are thinking for.
Okay, fair point. That's a big statement to make. We've got a question coming from Muiz. Muiz is asking about Ugar Sugar. And I don't think that he's bought it yet, but then he's contemplating doing so from the long-term perspective. Let me give Rohan a little bit of time to collect his thoughts on the sugar space. I will come to you, Vaishali, first on the charts. How does it look on the technicals?
Well, technically, I would say the long-term chart was doing very well. Right now, we've seen a good corrective move, and it's been consolidating at the 200-day moving average. So, at this point of time, I would say it is a calculated risk. The view would be that it is quite likely to see a bounce coming back from here on. So, I would say with a stop loss of 100, one can definitely buy the stock. And if we see a good bounce, the first target from your current market price is 105. We would be looking at around 120 to start with.
On the fundamental, sorry, I didn't catch that last bit.
It definitely calls for a buy. As I said, it is technically well placed.
Okay, fine. All right. So on the technicals, it's a buy. What about the fundamentals? Is this the best pick from the sugar space? And what are the headwinds, if at all, that a potential investor should look at going into something like an Ugar Sugar?
See, a specific Ugar Sugar I don't track. I have two sugar. So first of all, let me take you to the sugar space. I think so. The whole game is not with the sugar space; it's with ethanol story, which has been blending around. So, if you want to only invest into sugar space, I think so. Still, Balrampur Chini makes a lot of value comparing to any of the sugar space. Very mature company, and if some certain thing goes wrong, it is the worst to go wrong because it's a very volatile as a sector what we are talking for. And see the story. I would really not urge to invest into sugar rather than to urge to see the ethanol story, because ethanol is the story with $120 billion of import we do from the fuel, and because of ethanol the things are going, and we have heard this story around and around. I think so in this space, Praj industry is something which is going to be a superior story coming down forward, because the leadership what he has got with biofuel and the technologies what they've got is just exemplary. So whether if you're playing for sugar, I would recommend Balrampur, and for ethanol, Praj is a better choice.
All right. Now, coming to a very different sector, IT services management. Next up, we have a question on Allied Digital Services. The question is from Mehek, and they've bought the stock at 55. Currently, the stock is at about 126 rupees. Vaishali, Mehek wants to know if she should continue holding the stock or should she sell?
Sorry, which stock are you talking about?
Allied Digital Services. Let's take a fundamental view till then. Rohan, do you track the stock and what's your view on it?
I'm sorry, ma'am, I don't track Allied Digital.
All right.
Yeah, so I'm ready with the stock. I would say that yes, it's ready for a new round of momentum. Seeing the indicators also, it's showing signs of revival. So I would say 118 should be the stop loss. And once the stock crosses around 130 levels, it would bring in further conviction for a higher target of 140 to 145.
Okay, fine. That's the view on Allied Digital. We've got Ketan, who's also asking about Chennai Petroleum. It's made a significant up move in trade today. How does it look on the charts? Because there must be something to do with the price action as well. How would you trade this right now, Vaishali?
So, well, it definitely is not a buy at these levels because we are already in the overbought zone and we may see some profit booking. But if I'm seeing the longer term chart and all, I think it's quite possible that we see a target of 650, 680 from here on. So, I would say ideal levels to get it. Those who are holding should continue holding with a trailing stop loss. But the ideal level to get into the stock would be somewhere around 500 levels.
Okay. Any view on the fundamentals then, Rohan? Chennai Petro?
I think so. It's just started. Vaishali ji is a tech pro. I just see the long-term charts, and you won't believe from 2007 the stock has not done anything. The beautiful part about this is that you are available at 3-4 times of the valuation with 5% of dividend yield and EPS of 116. I think so it is going to surprise. This quarter results are going to be superior. So we met the management just a week back, and things are getting on a turnaround story. So yeah, it should be a very important factor of your portfolio. Very positive on Chennai Petro.
All right. Next up, we have a question on the pharma space by Saurabh, and they specifically want a view on Markson's Pharma and a long-term view on the sector itself. So, Rohan, how are you viewing pharma sector at this point?
See, honestly, we wish that pharma has to do much better. We are seeing some revivals from last 2 quarters into the sector. But when we are talking to the management and to the, to the sector, to the people and to Scuttlebutt, we don't see some structural growth. It is just the demand which has been outburst, and because of some ban in certain drugs, things has gone more better. So, as a sectorial point of view, there have not been a growth drivers what we are seeing into the point. Yeah, we can see a 7-8% of growth, but that doesn't create a PE expansion or PE revision into a stock. So, individually stocks may do good, but on a sector, we still feel there is a sluggish move into growth side into it. And Markson Pharma, sorry, I don't track it, so I don't have any cover for Markson's.
Any other pharma stock that you recommend at this point?
Yeah, so we are seeing very closely Sun Pharma, and we are seeing Aurobindo Pharma. Sun Pharma is looking very promising at this point of time. So see, whenever there is a sector revival, the first leaders are the first people who are safest and create the most of wealth. And of course, then you see the second, third, fourth tier companies which join along. In this segment, I think so, Sun Pharma is something which we need to see very closely, and we are very positive on it. Yet we are not allocated in our portfolio, but looking forward to invest into Sun Pharma.
Okay, interesting. We've got a question from Netra. Again, this is on Federal Bank. Rohan, I'll come to you first on the fundamentals. Now, she has read a few notes as well. She is talking about a downgrade of the stock, and she's saying systematic. She has read a note, and this is despite a 35% increase in the PAT number for the second quarter on lower provisions. I think by and large, quite a few of these banks are reporting better numbers, right? So what specifically is your view, Rohan, on the fundamentals for Federal Bank? Would you suggest a fresh entry for the long term at this point? Rohan, this one's
let us
yeah.
understand first that, I hope Netra is a long-term investor. Yeah, my long term, my view is only for long term. It's not for short term. So let me put it very clear to Netraji that who has this question. See, what is happening in Federal Bank or any PSU is that they were available below 1 time of its book value, whereas your Kotak and HDFC were at 5 times or 4 times to its book value. So there was a huge value migration which has come down to over here, and books has been better. The things are getting better. They are getting a professional management overall in comparison of what they were before 3 to 4 years pre-COVID. So I believe it's the time to add also and to hold for a longer period of time, 2-3 years down the line. I can make a statement that PSU banks will outperform private bank on a very, very large segment in next 2 years. So yeah, it's a buy and hold from my side.
Saying buy and hold at this point, and we've got, I think, I think people are also looking for a technical view on this one. Vaishali, what's the view on the charts for Federal Bank?
I really don't see a runaway rally coming in because the stock has been really consolidating. Unless we see a new round of buying seen today, it has to cross 155 level because that has been the hurdle. Time and again, we see there is resistance coming there, and 145 holds as a support. So for a short-term perspective, let's wait for a clarity. A break or a breach of either of the support or the resistance level would give us the further projected targets. So right now, I would just maintain a narrow range trading, 145 support, 155 resistance.
Now, since we've spoken about the banking space, I quickly want to add a follow-up, Rohan, for you, because Mehek is asking Federal Bank or SBI hold for long term. Which one would you suggest, or would you suggest both in your portfolio?
So first of all, we hold SBI. The reason is the value unlock is very big. See, I think so it's not comparable, honestly, because it's like comparing a Shah Rukh Khan versus comparing a newcomer Ayushmann Khurrana. Both are the greatest, so I'm loving both of them. But any which ways, both are very different to its own. Federal Bank is a small bank with more growth that can possibly give, and then of course it comes with a risk also because the growth is higher. Whereas SBI is a value unlocking story with a 15-20% of growth year on year. So I believe that if you are into a mid cap or small cap, Federal Bank is a great choice, and large cap SBI is a great choice. So both of them is great if you want to have it. But rather than if you ask me a particular one choice, I would say SBI.
Yeah, I mean, the first time that I'm hearing SBI and another bank described as Shah Rukh Khan and Ayushmann Khurrana, but having said that, I completely get the comparison. We've got time for one last question. Smriti has it.
Yes, the last question that we're going to take is from Satish, and they want to know about Aarti Industries. The stock is, he says that the stock is now trading at almost 50% down from its all-time high. And he wants to know why is it falling and how is the stock in the long term. So Rohan, what's your view on Aarti Industries?
I think so. It's the same what I have given in Deepak Nitrates, SpecChem. Is an area where things are not getting the right things. Everybody has done a lot of capex and the things have gone slow down. So I would not suggest you to exit at this point of time. It's a great company to hold on. It's a great management. I think so. It's the time to wait and watch for 1 or 2 quarters and then take a point to it. So at 50% down the line, it is the highest rated stock into Nifty 500 SpecChem category. So wait for the time. It's once the revival comes, I think so. Aarti would be the first one to cover very well.
All right. Quick view on the charts then for Aarti Industries.
So I would say, technically speaking, to my understanding, everything is cyclical. And Aarti Industries, if you see, it has shown signs of bottoming out, and it's right now showing an upward gradual move. So it made a base at 450, 460. That was the double bottom. Currently, I would say it's making higher bottom formation. So I would say trading target from here on could be looked at for a target of 520, 530. Once we see a clarity of this stock moving above 530 and sustaining above that, I think it's ready for a takeoff towards even 600. So that is how I would look at it, and I would definitely buy with a calculated risk.
All right. Both of you, Rohan as well as Vaishali, thank you so much for all of the answers that you gave. A few of them will stay with me for a while, I must say. Viewers, thank you so much for taking the time, and hopefully we've been able to get some of your questions answered. Of course, we will be back tomorrow to take even more questions. And do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.